I've been trading since 2008. I was trading 16 years. I learned from very professional traders. The trader that taught me he worked at Deutsche Bank as a trader, pretty much passed all his knowledge on to me. So last August, which is just last month, the main trade there I had was $164,000. I also took a $20,000 loss there, but the whole month ended up being, extremely profitable. Let's talk about this silver trade and why I took it. So I was watching silver originally because I wanted to enter down here. This is the candle I entered on. I wanted to enter down here, but I didn't have a technical reason to enter. I had the fundamentals, but in terms of technicals, what I usually look for is these types of candles. So I look for like rejection candles and then the bullish engulfer. So if we saw this particular setup like right here, down here, would have been perfect. I would have taken it. But we didn't get that. We got big bearish candle, big bearish engulfing candle. We got a couple of bearish candles there and then the bullish engulfing candle, which to me wasn't convincing enough to take the trade. And then what we actually got was this little bit of a higher low. And we got this wicks here, these wicks here, these wicks here. And what I always talk about is in an uptrend, look for bullish trades, having wicks that come down and then market comes back up to close. So you want the wicks to come down, the market comes back up to close. Exactly like this here. Wick comes down, market comes back up to close. What that shows is bears really tried to get in control. They failed. Bulls had the upper hand at the end of the day. So this is the candle I actually took the trade on.
All right, folks, here we are on Trading Up. We've got Joe in the house from Manila FX. Now, he's just made almost $500,000 in the last 8 months of trading. So basically this year, 2024, we're going to find out how he did that, see some of the trades he actually took, and he's going to talk you through the setup of those trades in a minute. But before we do, we want to sort of discuss what it takes for somebody to come out in public with their track record, which he has done, and we'll put a link up on it. Even I think we'll actually take a screenshot and probably put it on here now, so you can go through and have a look at it. Now, I've actually gone through and had a look at every single trade, and it's quite an interesting pattern, with the largest trade being 156,000, I think, and the smallest trade. The losing trades, you'll notice a quite unique pattern. So welcome to the show, Joe.
Thank you.
Now, if you're loving the show and thinking, where can I go and trade? Why don't you check out my prop firm sponsor, Blue Guardian. Now, these guys have been around for ages. They've been sponsoring Trading Up for over a year. And some of the key features that make them so good is that they've got realistic profit targets. For their challenge phases, it's only 8 or 4%. They also have a scaling plan up to $2 million. And they do profit splits of 85%, which is really high for this industry. They also have quick and reliable payouts and a robust reserve that make sure those payouts are as seamless and smooth as possible. Now, if you're looking to join, go and check them out. But first, grab my coupon code TradingNut, all one word. You're going to save yourself 25% off at checkout. There's a link in the description. Go and click that now. Right, let's get back on with the show.
Yeah, so to start off with, I want to, before we sort of have a quick chat about like public track records and finding mentors and that kind of thing, I just want to ask the question around your track record here. So when I went through it, I saw a lot of losing trades. In fact, there was more losing trades than winning trades, but the losers were really small and very, like, almost minute in some cases, and the winners were huge. I mean, can you talk us through your style at a high level around how you managed to make that happen?
Sure. So I'm basically a trend follower, right? And I don't day trade, nothing. I predominantly look at the daily time frame only. I'm not jumping down from daily to the 4 hour to the 1 hour. Daily and weekly time frame is where I stick. I've only taken 55 trades this year, which works out to be like 5 trades a month. And you're correct saying that I do have a higher losing rate. So my win rate, look at my track record, is 36.36% win rate, which a lot of people look at that and go, well, how do you make money? It comes down to the risk reward, right? So if you look at the risk reward, it's just under a 1 to 10 risk reward ratio. The way I achieve that is through just the old analogy of just trend following. It's the old school way of really trading, dating back hundreds of years. Trends are there. A lot of people doing one thing, jump in on the trend and ride it out to the end. So, so the way I like to trade is I take positions, right, in a trade, and if they don't work out, it's a small loss. If they win, I don't take profits. I just let the trades run. And that's how I really gain those really big winners. So in order to get those big winners, though, you're holding this positive equity, but on the way, you're taking new positions. They might sort of lose a little bit. So on paper, it looks like you've got, a lot of losses there, but then you're holding this positive equity, and then you close that trade, and then it makes up for all of it.
Right.
10%.
Okay. Because I was wondering about the psychology around it in terms of, how you manage to take so many losses in a row and then go, oh, bang, bang, here's the big winner, which is really hard to do without losing confidence. So that's how you do it. Interesting.
Well, that comes down to trusting your trading system as well.
Yeah, exactly. And so in terms of these, I suppose these losing trades that you've got, I mean, are you setting a sort of quite a tight stop loss and just hope, waiting for that one that actually doesn't get stopped out, or is it more intricate than that?
No, my stop losses aren't tight. So trading off the daily time frame, they're usually under like the last swing low or the swing high type thing from the entry. So they're not like a 5, 10 pip type of stop loss. Usually my stop loss is like, it could be like 30, 40, 50, 80 pips type thing. But the trades I'm trying to go for are like, 400, 500, 600 pip moves as well, to catch the winners. So I wouldn't say the stop losses are tight. They're moderate. Like it's not too big, not too little.
But is it a case of you like cutting the trade early so they don't hit the stop loss?
No.
You
No.
don't do
So
that?
one thing I always say is never close your trade. It's going to hit your stop loss one day, or it's going to hit your take profit one day.
Okay.
And although I don't set a take profit, I more close the profits trades if I think the trend's going to reverse, or I trail my stop loss. But until that happens, don't touch the trade, because the only way you can actually really play out your trading system, know the actual win rate, risk factor, and also stuff, is by letting it hit stop loss, letting it hit take profit, and never touching it until it does that.
Righty-ho. Okay. And so in terms of the markets you trade, what's your focus there?
I focus on everything. I look at every instrument my broker offers to me: commodities, soft commodities, high commodities, gold, energies, everything. Yeah, currencies.
And any fundamentals involved?
Yeah, definitely. So the fundamentals find the trade, technicals find the entry. So I'll look at, like, for instance, silver and gold right now. My last trade was on silver. That was 164,000, I think. The reason I entered that trade was based on the decline in US dollar, right? Decline in US dollar, interest rate cuts priced in, all that sort of stuff. They're expecting lower payroll numbers. They're expecting higher unemployment. All that sort of pushes gold, silver, safe haven. So I look at that sort of stuff, and that will give me sort of like this is what I want to be trading. I want to be trading silver or gold, and then I'll go in and look for an actual trade on the charts. But in saying that as well, I don't go crazy with the fundamentals. Like, I don't research 2, 3, 4, 5 hours a day. I just keep up general what's happening. Like, okay, this is happening in the US, this is happening in Europe. But I don't go absolutely insane, just dedicating everything to the fundamentals.
So you say you're kind of more technical versus fundamental?
Yeah. I'd say probably 30% fundamentals.
Okay. And what about like an account balance for somebody who's going to make $500,000 in 8 months? What kind of starting capital would you need?
So this account is $1.2 million. The starting capital, I think, was 600,000. So I put 600. And the only reason I did it was to create this track record for people to see. So when I went into the whole, when I wanted to start like Manure FX and all sorts of stuff, I was like, people are going to need verified proof. That's why I was sort of basically, all right, so let's get that verified proof. So I started this. I just put $600,000 into a trading account. Yeah, it's a lot. It's like not everybody has that type of money. Just I'm going to fund an account, but I did that, and I purely based it around the whole Manure FX style of trading, and just to show proof. If people go, hey, why should I learn from you? Well, there's the proof.
And what kind of risk appetite for each trade? How do you do the risk? So
what I teach and what I tell people and what people should really follow is that 1% risk. That saves me so many times through the years. I've been trading for 16 years, this exact trading system for 16 years. I know it in and out. I've trusted it. It's never steered me wrong. There are times I take higher risk. So silver, I took a higher risk. There's times where I do take more than a 1% risk, but that's me knowing my trading system. That's me having trust in it. That's me, 16 years of the same system. You get to know when to take a little bit more risk. And so it's not always 1%. Sometimes I might take a 5, 6% risk. But I'm only losing my money, and it's But yeah, like if you're learning still, you have to stick to that 1% or even 0.5%.
And so the 100 and what is it? I can't remember, $56,000 trade, whatever it was. I mean, were you 1% risk still?
No.
No, that wasn't. Okay,
No,
so
that
why
was
was
high
that?
risk.
Why was that high? Why was that higher risk?
I was very confident in that trade.
Okay.
Yeah.
Okay.
Yeah, I was really
All right.
confident in that trade. So I took, I think that was like, I think it was like almost 10% risk.
Right. Okay.
Yeah.
And so 10% risk on 600,000 is like 60 grand of risk. Okay. Right. So
No,
so
that
you
was on
cut.
100,000.
Oh, that was on 100,000.
Yeah.
Okay.
Yeah.
So the account was at 100,000 at that point, or you just used
No. The account was
100,000
at a
of
million.
the. Okay, right.
Or
Okay, so it was 100,000 risk. Right. Okay, so it was actually a 1.6 trade. I've
It
just had a
wasn't a
look at this
massive
figure
gainer.
here.
I
Okay,
actually
right.
got out of that trade because I accidentally closed it. Otherwise, it should still be running.
Oh, seriously? Oh,
Yeah.
no.
Which
And
sucks.
what about swaps? And like, if you're entering on the daily, I'm guessing you're holding for multiple days to keep these trades, let them run. What was your swaps? Oh, I suppose, yeah. What swap issues did you have, if any?
I don't really have too many swap. I'm pretty cautious in what's when looking at currencies or whatever. If it's too much of a high swap rate, I'm not going to trade it. You get some currencies out there that have extremely very exotic pairs that have high swaps and whatnot. I won't trade those. But the swaps generally don't affect it too much because the profit's always going to outweigh the swap.
Yeah, and I think I'd sort of got the impression that the 164 trade was like something you held for a couple of months. And
that one was an accident. Closed it early.
Yeah. And I thought maybe you're having to get all these swaps, but with a 10% risk on $1 million, which I suppose you'd already made a lot of that through, and it's all profit really on the 600, right? So so it makes it a bit easier. Now, what about so you've done this to create a track record, which is really, I mean, I'll be honest, a lot of people come to me and say, "Oh, can I come on the show?" And I'm like, "Yeah, send me a year's worth of track," and I don't get it. It gets to the point where I ask too many questions and they just never reply. And they just don't have the track record. I mean, what's your experience with this and the industry as a whole?
This is why I started it. This is why I started the track record. This is why when I started Middle FX, I was like, all right, if I'm going to go out on my own and branch out my own and start Middle FX, I need to show people proof. Because people are going to ask, hey, do you have a track record? I'm going to be like, yeah, sure, here it is. I think that's what sets me aside different. And there's other traders out there that I know that do have a track record. But there's, certain those traders like me or the other ones that do have track records aside from people that don't. So I won't name names, but there's big people out there on social media that are flashing, Bugattis and, Lamborghinis. They don't have a track record. And if you ask them for a track record, they do exactly what you said. They'll ignore you, or they'll block you, or they'll tell you I don't need to prove anything. That should be a red flag, right? It should be like hey, well, why? If you're teaching, have it on your website, have it on your YouTube, like a link people can go to, and it's just proof. That's all. It's not that hard. It took me 5 minutes to connect that account to my track record. So
Well, it's funny that because it doesn't matter how many instructions I give. It seems like it is very hard for people to come up with a track record. Anything other than an MT5 or MT4 screenshot on their phone,
which can be edited,
or a bunch of screenshots on their Instagram. I mean, it's kind of like that seems to be the nature of like trying to actually open up a desktop and go right click reports, download, and then send me as a PDF is impossible. I don't know why. Is it this generation, or is it just they don't have the track?
No, they don't have it.
Yeah, or multiple accounts. I've got too many accounts that I use. I can't piece them together. Well, if you're that interested to come on the show, you'll piece them together, Anyway, why don't we dive into a price chart and have a look at like some of these trades and the thinking around how you got into the trades that you took?
Yeah, for sure. So looking at August, so last August, we which is just last month, the main trade there I had was $164,000. I also took a $20,000 loss there, but the whole week the whole month ended up being extremely profitable. Let's talk about this silver trade and why I took it. So this is a bit of a replay on silver. So the main events around silver at the time fundamentally were weak US dollar. So the US dollar was extremely weak. We had reason to buy it fundamentally in terms of a safe haven. Now, when we're looking at safe havens, most people turn to gold and other areas, but silver is also considered a safe haven. It's a good asset to potentially buy during times of crisis. So we had a lot of talks about a potential rate cut coming in for the Fed is coming in rate cut and also stuff, which has now been confirmed. We had a lot of US dollars selling off and all sorts of stuff, which we can look at later. And then I thought, you know what, it's probably a good time to buy silver or gold. Originally, I looked at gold. I did not get an entry. There was no reason for me to look at entering gold. I just did not have a valid reason. That's why I took silver. So gold was my first option. I just didn't have a technical reason to buy gold. Silver, though, was my second option. And I was actually watching silver back down at these levels here. So I was watching silver originally because I wanted to enter down here. This is the candle I entered on. I wanted to enter down here, but I didn't have a technical reason to enter. I had the fundamentals, but in terms of technicals, what I usually look for is these types of candles. So I look for like rejection candles and then the bullish engulfer. So if we saw this particular setup like right here, down here, would have been perfect. I would have taken it. But we didn't get that. We got big bearish candle, big bearish engulfing candle. We got a couple bearish candles there and then the bullish engulfing candle, which to me wasn't convincing enough to take the trade. And then what we actually got was this little bit of a higher low. And we got this wicks here, these wicks here, these wicks here. And what I always talk about is having wicks in an uptrend, look for bullish trades, having wicks that come down and then market comes back up to close. So you want the wicks to come down, the market comes back up to close. Exactly like this here. Wick comes down, market comes back up to close. What that shows is bears really tried to get in control. They failed. Bulls had the upper hand at the end of the day. So this is the candle I actually took the trade on. So we ended up entering here. My stop was just right there. And this was given to all the Middle FX members as well. And the stops were just there. So it wasn't too much of a tight stop loss, considering, I guess it's not a tight stop loss considering it's the daily time frame. And then originally I don't have take profit set. So it was kind of just letting it run. The market came up and I forgot exactly which candle. Does it say what date I closed the trade? Maybe. Silver was closed on the 27th. So I held this through to the 27th. I was looking for the date. That was the candle where it closed on. So it wasn't a massive trade. As you can see, it was like 1.22 or whatever percent gain. But like I said, I wanted to hold the trade longer. It was an accidentally close. I think I was like half asleep at the time. I just finished a webinar. MetaTrader was like, I closed MetaTrader and it started like doing that thing where it loads and stuff. So I started going crazy clicking. And then I went to move it. So I went to move the screen and then the trade was down here and I accidentally clicked close. And as I was trying to move it, but I'm looking for another entry on silver anyway.
I've done that before where I was drawing it. So I've got like a little tool on the screen, which I can, quick buttons and stuff that I can use. And I was drawing a trend line and I didn't realize when I let go of the trend line to place it, it was over this close trade button and it closed the trade. I'm like, what are you doing? What are you doing? Don't want to close it.
I think it's happened to me a couple times now. And it's just like, it's really annoying.
Yeah, it is one of those annoying things. But I know it can be done. Now, so you're looking for another trade. You want to talk through that?
Yeah, absolutely. So even though silver did come – oh, didn't mean to replay that. Even though silver – because that is coming back to the downside, right? We would have been back at break even where I held when I opened the trade, which would not have bothered me. And this is the whole point of trend following is you have to trust the trend. You have to trust the reason you're entering the trade. Now, looking at silver seasonally, I do like to use seasonal data. Seasonally, silver has a bearish month is September. Now, we're on the 3rd of September at the moment. So if we take the 3rd of September all the way down to the 30th of September, the whole month of September, you can see that we have a 20% bullish rate. This is the last 10 years looking at silver. So generally, seasonally, it is a very bearish time for silver. Now, the way I would use this to my advantage is potentially looking for that pullback, which we are getting that pullback now anyway, right? So we're getting that pullback, which we can get, potentially down into here. Remember, we're still looking for long opportunities. We have the fundamental data that says we want to go long. I think from memory, I think it's mid month they're going to do the rate cut and whatnot. Now at the moment, this is like a 70% chance it's going to be a 25 basis point cut, and there's going to be a 30% chance that it's going to be a 70 basis point cut. Now, if payroll numbers come out lower and unemployment comes out higher, which is expected to happen. So payroll's expected to come out at we're going to expect 125,000, and unemployment's expected to come out at 4.4%. We're expected to have we could expect a 50 basis point cut rather than 25 basis point cut. So basically, looking at that and then looking at silver, that potentially we have this pullback. The way we can line this trade up is we know that we have the basis point cut coming. The rate cut coming in September. We know it's mid-September. How can we actually line this up for a potential trade coming in? So the market pulls back and we expect a higher low to form, right? We know price comes down in September. We can expect price to come down, so we don't need to enter just yet. We're waiting for the rate cut to come in. So I'm not going to enter silver until maybe the day before the rate cut, maybe if sort of something happens. A bit beforehand I might enter, but I'm going to be looking at entering around the day of the rate cut or the next day after the rate cut. Now, just to take a quick look at the events, what happens to silver around rate cuts?
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
So the day of the rate cut comes out is usually marked by this 0 point right here. This represents the 10 days before the rate cut. This represents 10 days after the rate cut. Now, if we look at what happens to silver after the rate cut, you can actually see that it starts to actually come up in price. So generally what happens beforehand on silver, before the rate cut, naturally we have this price coming down. And then the day of the rate cut, and after 10 days after, we have price going up and up and up. So it's the exact same pattern we're seeing now. Is seasonally seasonally silver's coming down in September. We have the rate cut coming in, right? So silver does come down before the rate cut right through here. And then after the rate cut, the day before the rate cut, we get that big push to the upside. The day after the rate cut, we get that steady trend to the upside. So it's how I plan this trade around what I'm looking for. So right now I'm looking for price to come into some sort of area of support, which could be around this area here. Create some sort of higher low. I feel like it's going to consolidate until the day of the rate cut or the day before. And that's when we're going to start to see the push to the upside. So it's just looking for these patterns that reoccur themselves all the time. So silver, we saw why I entered the first time, and we'll look how I'm actually planning this trade. Now, I think what gets a lot of traders is the time that goes into planning this actual trade. I'm not planning on taking this until mid-September. And most traders sit there going like, that's too long to look for a trade. Why don't you scale down? Why don't you do all this sort of stuff? And it's because the way I plan my trade is it's around the event that's coming up. So I'm planning this specific trade around the rate cut. We expect silver to come down during the rate cut. Seasonally, we expect silver to come to the downside. What happens after the rate cut is generally silver goes to the upside. So what we're getting right now is seasonally come down. The rate cut priced in, prices come down as well. And then what happens after the rate cut? Price generally goes to the upside. So that's how I'm planning this trade. So I'm planning on a trend basis with fundamental and seasonal approach. Now, it does take a long time to plan the trade, but that's my trading style. My trading style is a very simple way of trading. We don't have to scale down to many different time frames. It's very suitable for people who work full-time, people that just don't want to stare at charts all day. And it still makes a great return. As you can see, it's made a 58% return this year so far.
And so with that trade there, are you looking for a similar kind of entry criteria? Are you waiting for that push up, or because it's news, you're kind of going to just predict it and try and get in at a wick rejection?
Well, that comes down to sort of a bit of intuition at the time of what's going to happen. So the day before the rate cut, if we see good price action and we see some rejection candles, I'm going to enter the trade. even though we don't have the bullish yet, because I'm expecting that bullish to come in. So I'm going to enter at a good price. If I don't feel too confident, then I'm going to wait for the bullish counter to come in, and then I'll enter the trade. So it comes down to a little bit of intuition. You have to kind of, take a little bit of an educated guess sometimes on it.
Right. And is this one of these positions that you might take sort of multiple entries on, i.e.
No.
So you
never
if it
fail into
fails,
trades.
okay, so if it fails once, you're gonna that's it, it's done. Okay, right. So but you'll scale in whilst the trade is running with the trend, if that's the trend that you're looking to get into.
At times, it's very rare that I scale in. The last time I scaled in was I think around January, so to a trade, and that was on buying the Nasdaq, the Nas 100. So I don't just scale in unless it's a really well established trade. For instance,
right.
Like at the time when I scaled into Nas. So actually, if we go back to this, where is it? We go back to January. I think these are all the Nasdaq trades here. So you can see I scaled in. I'm pretty sure it's you can view it anyway through. Oh, actually, last. Where's the Nasdaq?
The reason I ask is because I thought that maybe I got it wrong, and I think people listening are probably going to be thinking the same thing. So you said at the start that like if you're holding a profit, you'll scale into the position, like you'll try and get in again, and that might result in a smaller loss. Was that incorrect as to what?
No. What I meant there was no. So what I meant there was I will take new positions on other trades. And so basically what I mean by that
so
is
not necessarily scaling into the same position, just different
No, not at all.
Right,
so the only time I'll sort of scale in, so just look at the NASDAQ trades here. You can see I scaled in a couple times if you just go through it. And that was the reason being was we had a really well-established trend, right? If we have that, I'm gonna scale in. Looking at silver on a technical basis, I believe we're in for a nice long-term trend. On a technical basis, it's a little bit it's a trend, but it's not the cleanest trend. It's kind of like consolidated. But if we actually look at it on a higher time frame, and this is why I love higher time frames, I feel like this Fed push, right, this Fed rate hike could have that push that it needs to get back up into these levels up through here. So where silver sits at the moment is we are holding above these highs. We're just really trying to test those highs. And this is why it's important to scale up and look at those higher time frames. So I feel like if we get the entry that we want on silver, I mean, this is not the entry, but potentially we could be looking at something like that big, right? And that's what I'm going to be looking for. They're the type of trends that I love, right? That's what I caught on Nasdaq. That's what I catch on multiple trades, where that make me the big profit. So,
and can I play devil's advocate?
You have to be very patient. So.
Can I play devil's advocate here and say, like, so you got out of that first trade by accident? What if you hadn't got out, right? And you had that big bear come down?
I wish I didn't get out.
Okay, so you wouldn't have moved your stop to break even. You would have just like
no, absolutely not. I never set my stop loss to break even unless the trade's like, for instance, the only time I'll set it to break even is let's just for instance say this is an entry, and let's say we're aiming for these highs up here. If the trade was maybe at this level here, then I'll set it to break even. But while it's around here, it's too close to set a break even. I don't have a real rule of thumb, but usually if it's past 1 to 2, probably the time to set it to break even.
Okay, yeah. So you're in for the duration of the trend. Regardless. Okay, cool. Correct. Hey, look, that's been fantastic. Little bit of knowledge you've shared with us here. I've got to say, it's actually really good to see someone who's using not just price data on the chart, but also basing it on some key fundamental, I suppose, events and or historical trends that have happened that aren't necessarily just looking at price data go up and down. So really, really interesting stuff. Now, if somebody was going to learn from you, I mean, what kind of things can they expect to learn from over there at Manila FX?
I mean, so basically what I do at Manila FX is I do 5 webinars every week. So Monday to Friday, I do live webinars, and all those webinars are recorded. You can watch them in your own time. The way I start webinars is education, and then I get into analysis, and then I talk about my trading system, how to do it. What I really try and focus on is the patience part of trading, psychological part. Anyone can learn a trading system, but if you don't have the patience to trade it, it's not going to do you well. My trading system, I've only had 55 trades this year, which is like 5 or 6 trades a month. It's not a whole lot, but as you can see, it's made almost 60%, right, return, which is really good, right? So I like to really show people that you don't need to trade a lot to be a profitable and professional trader. You just have to have clear and quality setups. So what I try and focus on is don't come into the charts every single day looking for trades. Come in, analyze the market. If the trade's there, it's there. If it's not, walk away. And that's why I like to focus on higher time frames. I don't have to scale in, and there's a lot less, clutter going on. So like I get overwhelmed very easy if there's too much information. So I like to sort of keep it very simple and not feel overwhelmed really with my trading. So Manila FX is all based around my trading style, trend following, and we are testing another trading system at the moment, which has done really well. I've back tested through 500 trades. It's done really well, and I'm forward testing it at the moment on TradingView at the moment. So I've got 4 trades running. I'm going to forward test it through September and see how it goes. If it goes well, I'm also going to release that through another trading system through Manila FX. But
Brilliant.
yeah, I mean, there's a lot of education on Manila FX. Good community as well.
I suppose one thing we didn't touch on was your trading history. I mean, can you give us a quick sort of potted history as to your journey as a trader?
Yeah, I mean, I've been trading since 2008. I was trading 16 years. I learned from very professional traders, and the trader that taught me was he worked at Deutsche Bank as a trader, and then pretty much passed all his knowledge on to me. So that was this kind of the style that I'm using now, really. He used a little bit more fundamentals than I do, but yeah.
Okay.
It's yeah, I mean, look, I've been 16 years of doing the exact same things, very boring, but it makes money, right? So
yeah. And I suppose if you say you trade like the banks, that's what people want to do, then this is kind of a way to trade like somebody who traded or learn from somebody who trades at a bank.
There's a big misconception there as well, because people think banks have this secret sauce, or they don't use technicals, they don't do this sort of stuff. I look at bank reports every day, which are available in Manila FX, and those bank reports show clear technical setups like trend lines. They use indicators, all this stuff. They use moving averages. They also use fundamentals. They also use other things and seasonal. There's so many different things. So people think that banks don't use a lot of technicals or indicators and stuff. It's they're the ones that create these things, So it's there's a big misconception there that they have this secret sauce and they trade the exact same way as as I do, or as another trader does. They just have a bigger portfolio and they know how to handle it.
Brilliant. Well, look, that's hopefully cleared up a few myths and stuff for those guys listening and watching out there. Now, what's the best way for people to find out more about you?
So I don't have a website specifically, not yet. I guess YouTube, Manila FX Trading. They can search me.
What we'll do is we'll hook that up in the link below the video here or in the podcast description. Sweet. So go and check it out, folks. All right, Joe, thanks for coming on the show and sharing with us. It's been awesome.
Amazing. Thank you. I was happy to be a part of it.